What's up, traders? It's Mark here at DynoTrading coming at you with another wild session recap. I don't know what it is about Mondays and Fridays, okay? The market seems to want to go berserk to start the week, and it wants to go berserk to close out the week. So today I'm going to recap for you why volume matters, why it makes a difference, and how it's, I think, the best trading indicator on the planet. All right, let's get into it. What you're seeing on the screen right now, guys, is the NAS 100. You already know this is my favorite. If you trade Forex, your symbol is NAS 100. If you trade futures, your symbol is NQ. And of course, if you trade stocks or options, your symbol is QQQ. Okay, and first, let me just go ahead and get rid of this text here to clean up the chart. And there you go, folks. We only had two signals in the morning session. All right, so this is what a long looks like, and this is what a short looks like. So guys, just so you know, this green and red color band that you see overlaid onto the chart, this is our proprietary volume-based indicator. Again, for those of you that are not in the know, this is essentially a trend following strategy. That's all it is. It's a trend trading style, a trend trading technique. It incorporates elements of momentum and volume. And you couldn't ask for a more simple, clean, and easy to read chart, right? I mean, look, folks, this is green and red. It doesn't get any more simplistic than this. And we only had two crystal clear signals from today. Now, to put this into context, okay, with respect to what a lot of you guys are using and getting confused by, is these candlestick charts, right? Where you're just trying to slap on your Bollinger Band nonsense, your stochastics, your RSI, all these free, what I call garbage indicators that make no sense, at least to me, but people still seem to want to use, right? And you want to know why you continue to use your candlesticks is because, look, here's the truth. You don't know any better, right? You've got to educate yourself and keep an open mind and allow me to show you how to transform this chart right here into this chart right here. Okay, same symbol, same session, same time frame, same everything, except these professional charts are a massive upgrade. Makes sense? Anyway, let's look at some of the setups here, okay? And pay very close attention to this video, folks. I can guarantee you're going to learn something fascinating, all right? So what I've taken the liberty of doing here for you is isolating every reversal bar. What's a reversal bar? Well, a reversal bar is simply areas in the market where the market does one of these. Comes down, comes back up again, and this bar right here is really the universal definition of any reversal bar. In this case, this is a bullish example, and if you flip this around, it would be a bearish example. You understand? Now, for those of you that trade the NAS, you're going to love this. Okay, it works really, really well on the NAS and the S&P and gold and oil. I don't know why. It just works. You know, it's not my job to question why something works. Volume is something that I've always been fascinated by, and to me, volume is kind of like the Holy Grail. If you know how to harness the power of volume and volatility together, and you look for very low risk, high probability setups, then folks, it doesn't get much better than that. All right. So you see these yellow boxes here. Okay. These yellow boxes are every reversal bar that printed as the market was pulling back. Okay. So we want to pay attention to three things. Number one, we want to wait for this volume indicator to do what? We want to wait for it to turn green, right? Or in this case, turn red. I'm going to come to the shorts in just a few seconds. But for now, we're looking at this setup here on the left. In fact, let me just go ahead and zoom in here, okay? Let's really dial in here, folks, okay? So when the volume indicator turns a certain color, in this case green, we want to wait for the market to dip back a little bit, right? This is called a retracement. This is called pullbacks. This is called waiting for a better entry. You can call it whatever you want. I like to call it pullbacks, okay? And while the market's pulling back, we now want to identify these two types of bars. You see this green bar right here? In fact, let me just go ahead and squish in. Yeah, that's better. Okay? So we are really trying to hone in on only these two types of bars. Okay, and this is part of what I would consider to be a rule-based mechanical system. If you can follow the rules, stay mechanical with your entries, and take the emotions out of your trading, I can almost guarantee that your technical analysis is going to be supercharged, especially for those of you that are still on your candlestick garbage. You ain't never going to find a pullback, and you ain't never going to find a retracement bar on your candlestick garbage. All right? It's just not possible. Whereas when you embrace more of a price action strategy, which is not a time-based strategy, right? That's the main difference between candlesticks and price action. Price action charts give it to you straight. That's what I like about them. Okay? So look, that's really the essence of this trading system and trading style. We want to wait for the trend to change, establish some momentum a little bit. We then want to wait for a pullback, and then we want to qualify. Key word, folks. We want to qualify the trade and look for something that we would consider to be relatively low risk. There is no such thing as no risk or zero risk. Always remember that, guys. Trading is risky. Trading is hard. There's a reason that a lot of traders out there fail miserably. And I think it's because those people are still stuck in the 60s. They're trading this garbage. But even when you have a professional price action based chart, you still have to have a very strong sense of risk management and risk reward. Make sense? So either one of these two setups would have been okay. This first one prints, takes off for a little bit. You probably got stopped out if you had a very tight stop, and that's okay. Being stopped out is part of the game. Now the second one prints, okay? This would be potentially trade number 2. And boy, does that thing rip straight up for just about 300 ticks and pips. Just think about that, folks, all right? 300 potential ticks. But we're not done. What happens over here, right? The vol indicator turns red. That is your potential clue that the market might now be getting ready to sell off. You don't know for sure. Nobody knows for sure. All you can really do is do what we're doing now. Zoom in and do what? We want to look for what? We want to look for reversal bars, which is this one here and this one here. Does this make sense, folks? Hey, look, stop me if I'm going too fast. Stop me if this is confusing. Post your comment in the chat below. I don't think this is brain surgery, right? All we're doing is waiting for pullbacks within the context of a trend. And what we're doing here on this bar here and this bar here is we're trying to qualify the trade. Make sense? And so on this bar right here, which would at this point be trade number 3, yeah, we took a small loser on this one. But what about trade number 4? Both of these meet our requirements, trade number 3 and trade number 4. You understand what I'm saying? Folks, you cannot get discouraged and disappointed just because your very first trade of the day doesn't work out, right? Trading requires a tremendous amount of discipline, focus, and patience. If you don't have any of those qualities, look, man, you might not be cut out for trading. I hate to say that to you. You know what I mean? But anyway, so if we see how this bad boy played out, it was an absolute doozy. Okay. This thing dropped another 200 potential ticks and pips. So, you know, when I say that, you know, a market can move 1,000 potential ticks and or pips every day, folks, this is not a joke. Okay. These are real price action strategies and techniques that can be deployed again on any market. Forex, futures, stocks, options, it's all good. And the last thing I'm going to say here is, again, thank you to everybody who sent their feedback on the vol indicator today. You know I love each and every one of you guys. I apologize if I can't always respond back, but rest assured, I'm getting your feedback. I'm super glad and super happy that you guys are killing it. Congrats to everybody that just caught a monster Monday today. And let's see how this market shakes out tomorrow. Guys, that'll do it for this video. If you'd like to get your hands on this powerful volume indicator, then get in touch, call, text, email, whatever's convenient, and I'd be happy to hook you up with a free one-on-one demo, really show you how this volume indicator is going to supercharge your trading. Guys, thanks for watching this video, and I'll see you on the next trade.